All right, today we're going to demystify one of the most powerful but often misunderstood tools in a trader's toolbox. We're talking about an indicator that's all about gauging the real strength behind a market move, and it helps answer a question that every single one of us has asked at some point.
You know the feeling, right? It's a classic problem. You see a price start to move, you get excited, you jump in, and then nothing. It just fizzles out. You get caught in all that choppy, sideways mess. So how do you tell the difference between a real, powerful trend and a fake out that's just going to steal your money? Well, lucky for us, there's an indicator designed for that exact job. It's called the Average Directional Index, or for short, the ADX. And it is built from the ground up to measure the one thing that often separates a winning trade from a losing one: trend strength. And look, getting this right is absolutely critical. I mean, think about it. The biggest profits, they almost always come from riding a strong, established trend. And one of the fastest ways to bleed your account dry? Getting stuck in a weak, sideways market full of frustrating little losses. So let's decode this thing. Honestly, the best way to think about the ADX is like a car's speedometer, but for the market trend. It tells you how fast and powerful the trend is. But, and this is super important, it doesn't tell you which direction the car is driving. So technically speaking, the average directional index is used to measure, you guessed it, trend strength. You'll see it on your chart as just a single line, and its value goes from 0 all the way to 100. The higher that number gets, the stronger the trend is. Simple as that. And that brings us to the number one, most important thing you have to understand about the ADX. It is totally non-directional. Let me say that again. The ADX line will go up during a huge, powerful uptrend, and it will also go up during a huge, powerful downtrend. It only cares about strength. It has no idea if we're going up or down. So how do you read this speedometer? It's actually pretty straightforward. If the ADX is chilling out below 20, the market is basically asleep. There's no real trend to speak of. But once it crosses above 25, that's your signal. That tells you a strong trend is waking up. And if you see it get over 50, whoa, that's a very powerful high momentum move. Okay, so you're probably asking, if the ADX doesn't show direction, how in the world do I know whether to buy or sell? Great question. That's where its two little buddies come in, the plus DI line and the minus DI line. Think of these as your GPS. When the green line, the plus DI, is on top of the red line, the trend is up. And when that red line, the minus DI, crosses over the green one, the trend is down. Easy. Now, don't worry, we're not about to get lost in a bunch of complicated math formulas, but it helps to know the basic idea. The indicator starts by measuring the daily up and down price moves. It smooths that all out to create those two directional lines, the plus DI and minus DI. Then it just calculates the difference between them, smooths that out one more time, and boom, that gives you the final ADX line that measures the overall strength. Okay, theory time is over. Let's get into the good stuff. How can we actually use the ADX to make smarter, more profitable trading decisions? This quote right here, this says it all. This is exactly where the ADX is king. It's brilliant at spotting that exact moment when a market goes from being quiet, boring, and sideways to a powerful, explosive trend that you can actually trade. So here are the three main ways you use it. First, to confirm breakouts. Price breaks a key level, and at the same time, the ADX spikes from below 20 to above 25. That is a high confidence signal. Second, use it as a filter. Only take those buy or sell signals from your DI crossovers if the ADX is above 25. And third, use it to stay out of trouble. When that ADX is just flatlining below 20, you know it's a choppy market. It's telling you, hey, my trend following strategy probably isn't going to work right now. All right, let's make this super clear with a real-world example from the source material. We're going to walk through a trade in gold step by step using the ADX to guide every single decision we make. Okay, first up, the setup. You can see right here that the price of gold is just going nowhere. It's stuck in a boring range, just chopping back and forth. Now look down at our indicator. The ADX is sinking, and it's stuck below 20. This is the market literally telling us, I'm taking a nap. There is no trend here. So what do? We wait. And then this happens. This is where you see the real power. Price smashes above resistance. At the same time, the plus DI crosses above the minus DI, giving us that uptrend signal. But here's the magic confirmation. The ADX goes from weak to strong, just rocketing from 29 all the way up to 65.
This isn't a fake out. This is a real breakout with serious momentum behind it. And that is our signal to get in. And finally, we have to talk about the exit. Price is still high, right? But it's starting to stall out. It's losing steam. So what's our trend speedometer telling us? Well, the ADX hits a peak and then starts to roll over, pointing down from its high. This is a huge warning sign that the trend's momentum is fading. That's our cue to get out and lock in those profits before the whole thing reverses. So as you can see, the ADX is a beast of a tool. But let's be real, no indicator is a magic wand. So let's wrap this up with a balanced look at what it does best, and just as important, what its limits are. So on the plus side, it gives you a hard number for trend strength. No more guessing. It is fantastic for helping you dodge those awful choppy markets and for confirming when a breakout is the real deal. And best of all, it works on pretty much any market or time frame, and it clearly shows you when momentum is picking up or starting to die down. But you have to respect its limitations. The big one is that it's a lagging indicator. It confirms a trend that's already underway. It does not predict the future. And like we saw, it's pretty useless when the market is just going sideways. It's only telling you about trend strength, not where the price is headed next. So the most crucial point, the real bottom line is this. The ADX is not a complete trading system all by itself. Don't use it in a vacuum. Its real power is unlocked when you combine it with good old-fashioned price action and maybe one or two other indicators you trust. And that really brings us right back to the beginning. This quote reminds us what this is all about. The whole point of using a tool like the ADX is to help you find and ride the biggest, strongest trends, because that is where the real opportunities are. The ADX gives you an objective way to see the power behind a move, helping you filter out the noise and zero in on real strength. So the only question left is, now that you have a way to measure the trend, what are you going to do with it?